I think the people who are on the Zoom, they can also hear us. So myself, Amitava Chakraborty from BMO, I'm a lender. And with me, Mr. Shashank Shekhar is there from the CEO, from the InstaMortgage founder and CEO. So we already had a similar kind of program almost, I would say 6 months to 8 months from today. And in that program, we talked about the nitty-gritty of the visas and what is important in this entire financing journey. When people are thinking about their home financing journey, one of the important pillar basically is the visas.
Sorry,
When people
she's
are
going to be
thinking that
excited.
in this country, when they are applying for their home mortgage, and especially in this room, as we can see that we are the real estate professionals willing to help our clients to make sure in the United States, they are getting maybe their first home or maybe their another dream home. All the time, this visa categories, if they're not a US citizen or on a PR residency or green card, definitely immigration status and visa are an important pillar to this entire journey. And this is a slide, I would say, whenever we all faced in during our transaction, these are the basic nitty-gritty for home financing eligibility quotient. We talk about eligibility quotient, what we need for any client. We need 2 years of residency, 2 years of income, and 2 years of their definitely residency, income, and credit in this particular country. And in this entire process, one thing is very important, that is visa and the immigration. As you can see from the first 3 points, that what kind of visa one client is. The moment they're in, there are multiple visa. As we are in the, I would say, in Bay Area, we call the tech hub in the Silicon Valley, the tech hub of the United States. Most of the clients we have seen, the Gen Z generation who are here, they are on different visas like H1, L1, different categories of visas. Those immigration visas, how it will pan across? What are the different nitty-gritties? So I would call Mr. Shashank Shekhar to talk about more in details about the different visa dynamics and processing out there. Let me see, it's not. Yes, so the dynamics, I will just hand it over to him to discuss about, and then it's working. You can this one. Take this mic. I think for this one, and this is probably change over. Perfect. Sure. Yes. Okay, good morning, everyone. So what you're seeing on the slide here is how US population has grown from a perspective of immigrants. You will see it was 1965 when the immigration law was passed. And until then, most countries in the world could not, people from most countries in the world could not immigrate to the US. Especially people from Asia were not allowed to immigrate to the US unless under special circumstances. The law in 1965 that President Lyndon Johnson signed, that's what shows is that from about 3-4% of the US population being immigrants to about 14-15% that we see right now. Of course, in that, the entire, the breakdown that you see here is that a lot of them have become naturalized citizens already, almost 45% of them. 27% are lawful permanent residents, so on their way to become naturalized citizens soon. But it's still a lot of, almost quarter of that is either unauthorized immigrants or temporary lawful residents who are eligible to buy homes depending on the kind of immigration status they are on. And that's basically the purpose of this presentation, is to bring you, is to talk about different kind of both temporary lawful residents and in some cases even people who are on, say, I-10 or DACA status. So let's talk about that. Sorry.
Who are they, and are they allowed to buy the home?
We'll talk about that. So we'll talk about some of the visa categories who are unauthorized but could potentially still be buying homes. In most cases, no, but in certain cases, yes. So this is specifically Silicon Valley. This is Santa Clara and San Mateo counties.
The data is not usually updated because the census does not happen that fast. But as you can see from an immigration status or people who are not born in the US, they actually take up majority of the employment, especially, of course, in computer science, as we know already, is the tech employees. There are a ton of tech employees who are foreign born, and either they are citizens here now or on different kinds of visas. But even if you look at other professions, right? Engineering, natural sciences, medical health services, financial services like banking, and just other occupation, there's still almost 50% of the workforce are people who were born somewhere outside of the US. So, and that's why this class is so important, or that's why you as real estate professional need to understand all these visa categories, is because especially sitting in Silicon Valley here, probably every second potential home buyer or seller was probably foreign born, whether they are currently on visa or not. That's a different case. So let's talk about some of the most common work visas here. H1 or H1B is what is the most common form of tech visa. So these are people who are typically software, hardware engineers. They are already qualified, and they have already been working usually for a few years in a foreign country, and then they are brought to the US. This is a professional or into academic field, and so that's the most common form of visa that you will come across. People, especially who are tech employees, you will see that they are on H1B, and so the other, which is slightly less common visa, but is still used for the same purpose usually, is called an L visa, where people who are already working for a certain company in a foreign country can be transferred to the US. I actually came to this country on an L visa. I was working for a multinational company in India, got transferred here in Silicon Valley. So the big difference between H1B and L visa or L1 or L2 visa is that on H1B, you don't need to be working for the same company. You could be working for Amazon in India, but you can come and work for Google here. You don't have, it's not a company transfer. The L visa is a company transfer. You're already working for the same company in a foreign country, and you're transferred here. You could be working in Europe or Asia or South America, and you could be transferred on L1 visa. Sorry, loses the connection sometimes. There you go. O visas are for people who are extraordinary capabilities. You will rarely come across this visa. We are talking people like Nobel laureates, people who are Olympic, say, gold medalists. We are talking top-level scientists. Einstein came on a O visa, just a fun fact. So so we are talking that level of capability. So these are usually very high diplomats, very, very highly recognized scientists, very highly recognized, maybe professors in the academic field. These are the people that, I mean, any country would literally kill to get those people into their country because of the value that they bring to them. So there was a special kind of visa established for those kind of people to come into the US, and that's O visa. And that's why I said it's very rare that you will come across people like that, but that's basically what an O visa is. TN visa is especially for Canadian and Mexican citizens. You will see practically every Canadian citizen that comes to the US comes on a TN visa. And this is, again, something you'll commonly see for any Canadian citizen. It's so they can literally actually, if they have a job offer, they can walk to the border, get their passport stamped, walk into the US and start working here. So there's a lot more flexibility for Canadian citizens specifically, but this was part of NAFTA, the agreement where Canadian and Mexican citizens could come to the US and work here. It actually says under the North American Free Trade Agreement. So, so again, TN visa is something that you would very commonly see here for Canadian. This is the most complicated one, the employment authorization documents. So visas, as I said, still only there are top 3, 4, 5 kinds of visas that you will come across. In fact, in most cases, you will only come across H1B, you'll come across the L visa, and in some cases, if they're Canadian citizens, you will come across TN visa. EAD is where it gets extremely complicated because there are 50 plus different kinds of employment authorization documents. Depending on what reason you are coming to the US, you are authorized to work in the US. So employment authorization document is basically a card or a document that gives you the authorization to work in the US. The problem is that there is no standardized EAD. There are, as I said, there are probably about 50 different kinds of EADs depending on the reason you have been given authorization. So if you're a refugee, you will get a different kind of an EAD. If you came here on asylum, you will be given a different kind of EAD. If you came here because there was some kind of abuse in your country, you will be given a different kind of EAD. If you're an H-1B who has applied for a green card and you are in an advanced stage, you will be given a different kind of EAD. So it becomes highly tricky because a lot of borrowers will come to us and say, we have an EAD, can we get a loan? In most cases, the answer is yes. In some cases, the answer might be no, depending on where EAD is. And also, it depends on the lender. There are certain lenders who will accept a certain kind of EADs, and there are certain lenders who will not, especially the asylum and refugee kind of EADs are something some lenders are very tricky about. And they will say these are very, very temporary EADs, and we may or may not accept it. So something we should be aware of. Now, you had asked a question, are unauthorized immigrants, can they get a loan? So even within unauthorized, we have completely unauthorized immigrants, and there are certain immigrants who are temporary authorized. So DACA is a temporary status, but there are almost 3 million people who are on DACA. Even though it's considered a temporary status, meaning they are not on their way to get a green card tomorrow, or they will not become citizens tomorrow until the law changes, they qualify for most loan programs. So DACA is, of course, for people who came to the country when they were super young. I think they were less than 5 years old when they came to the country as illegal immigrants at that point in time, but they went to college here, they're working here. So they were given, President Obama, during his regime, there was the rule that was made that they will get the temporary immigration status here in the US. So DACA is a huge population. We have done a lot of loans for people on the DACA status, and they qualify for practically every kind of loan, FHA and Fannie Mae. And Amitabh comes back here, I'll let him talk about jumbos because his company is specialized in that. I-10, it's something which is technically from an immigration perspective, could be illegal immigrants, but they work here, they pay taxes here, so they are contributing to the economy here using not social security number because they're not authorized or they don't have the right to get an SSN, but they get what is I-10, which is basically a tax filing number that they get. So there are companies, and we do that. We can do up to 90% loan for people on I-10 up to a certain loan amount. They may not qualify for extremely expensive homes here in Silicon Valley, but in some cases they might be able to. So I-10 is, again, they may not even have social security number, but they may still have some credit history. They might still definitely have the income to support the mortgage payment. Foreign nationals who have no legal standing in the US, they don't even live here. So people, I don't know, people who live in China, but they just live there, meaning they don't have any residency status here, or people in Middle East or people in Europe, and they want to buy homes here in the US. So they're not legal or illegal. They're not residents of the US. You could do foreign national loans up to about 60% loan to value, meaning 35% down payment in most cases. What we look for is their foreign income in this case. We look for foreign income. We need to make sure we need some kind of a conversion mechanism. Of course, if their documents are not in English, we'll need to get that translated, et cetera, et cetera. But there are cases where we can do foreign national loans up to 65%. So that's what is called a DSCR loan. Yeah, we could, but it'll still be a foreign national. It'll still be a foreign national loan. Yeah, you could do foreign national DSCR loan. Yes. Yeah. So F visas, which are students. So when students come to the country, they come on a visa called F visa. Even after they graduate, they get an EAD, and which is called an OPT. It's a temporary EAD. They are not eligible for a loan. Is because it's a temporary visa. They came here to study. They will probably go back unless they get an H-1B. Some company sponsors their H-1B and they get their H-1B approved. If they do not get that approved, so they basically are considered as foreign nationals. So even if you're a student visa and you work somewhere or some kind of temporary job or something, and your parents somewhere in the foreign country are willing to give you 80% down payment, and you only want to get 20% loan or 50% down payment, you could potentially buy, but as a foreign national, so higher interest rate and all that stuff. You're not considered a US resident from a mortgage perspective at that point in time. Okay, a couple of restrictions that we should be aware of. Permanent resident are treated as US citizens in every single loan scenario, whether you have a green card, which is the permanent residency status, or you're a US citizen, you are considered at par. Because if you're a permanent resident, it's as good as being a citizen. You're on your way to become a citizen in the next 4 or 5 years anyway. And for all practical and legal purposes, other than the fact that you can vote in the US, you are considered like a citizen from, at least from a mortgage perspective. So we don't treat anything differently. Of course, you'll have to produce a copy of your residency card, permanent residency card at the time of mortgage, but that's all we ask for. H-1B and EAD holders are eligible for FHA loans. FHA loans are tricky. I know that we don't do a ton of FHA loans here in Silicon Valley, but FHA is extremely tricky from an immigration perspective. The only two immigration category that they accept are visas. On visas, they only accept H-1B. So someone on L1 visa or O visa or TN visas, those are not, HUD does not accept those visas as the visa to be eligible, but EAD holders are. So if you have an employment authorization document or you have an H-1B visa, you can get an FHA loan. Any other visa category is not eligible for an FHA loan. Fannie Freddie does not really specify any immigration status at all. So your conforming loans, all it says is that it's underwriter's call. You have to decide if this person is a legal resident in the US, can they work here in the US? And so they do not get into 70 different document types saying, hey, if this is what, this is what, this is what, then you have to do this. They say underwriters should figure out, and that's why between lenders you have different policies, is because somebody will say an EAD based on an asylum is a valid document. The other lender will say it's not a valid document because we don't know if they will be thrown out of the country, say in 6 months or 12 months. So that's why you get a little bit of judgment call on Fannie Freddie loans, but almost 90% of EADs are eligible, and all kinds of visas are eligible for Fannie Freddie. Jumbos or non-QMs are what is called portfolio loans. Portfolio loans means that it's as a lender, as a bank, I'm putting my money to give you to fund these loans, which means I get to decide what my guidelines are. I do not follow Fannie Mae guidelines. I do not follow Freddie Mac guidelines. I don't follow FHA guidelines, is because it's my money on the line and I'll decide what my guidelines are. And that's where you see the most disparity among different lenders, is because a Wells might say this and Citi might say this and Chase might say this, is because it's their money, they get to decide. But when you do a Fannie Mae loan, then you're following Fannie Mae guidelines. When you're doing FHA loans, you're following FHA guidelines. And that's where you will see, so non-QM and jumbos, and that's why you need to make some calls. And Amitav, of course, he has worked for multiple banks, so he might be able to come here and shed some light onto that. But that's where you will see some of the differences. Okay, we'll do the potential hurdle, couple of those things, and then I'll have Amitav come here and talk about some of the case studies. So some of the hurdles that we typically see is when you have visa or an EAD expiring soon. So people get into contract, a visa is expiring in the next 2 months, because most visas are good for 2 or 3 years. Most EADs are good for 12 to 24 months. So at any point of time, they're technically always expiring. They're expiring in 2 years, so you have to be renewing that. And that could become a problem at times, is that you get into contract and your visa is expiring in 30 days or 60 days, sometimes even before the close of escrow, or sometimes before the first mortgage payment. Those are tricky situations for lender. They don't want to be lending to people whose visa could potentially expire tomorrow and they're thrown out of the country. And so they have to be extra careful in that case. Again, different lenders have different guidelines on this. Some may require you to have an employer or their lawyer send a letter saying, we have already applied for a renewal, we expect this to be renewed. Some lenders may ask you to show the proof that these visas were renewed in the past. There is past history of these visas and EADs being renewed. So we can expect that there will be future renewals. So these are judgment cases depending on what the lender thinks is the right way to do that. So applying for renewal, but not renewed it yet. And there are certain cases where the visa is renewed, but you have to go back to your country to get that visa stamp on your passport. That's another thing that underwriters sometimes get tricky about, is that the problem sometimes is not so much that they are not legal residents or they are not legally authorized to work. It's just that people, underwriters are, predominantly the underwriters were born in the US. And so they have not gone through this entire process. And some of the things become tricky to explain it to them. And that's why when Amitav and I work, given the fact that we are immigrants here, we are able to explain it in a way because we have gone through this process ourselves. And that's the tricky part, is that sometimes there'll be like, oh yeah, I can see that there is a renewal, but there's no stamp on the passport that this says this visa is renewed. They do not understand that these two are very different things, and the borrower is still qualified to work here in the US. So sometimes you have to go through a little bit more explanation. Of course, if underwriters have prior experience of underwriting these files, then it becomes slightly easier because otherwise there is a back and forth sometimes. And sometimes they won't even accept it, even after all the explanation. I remember working with the Union Bank. We used to do a ton of loans with Union Bank. And in the beginning, we had to train the underwriters on all the immigration stuff. And after that, it became much easier because they understood the process much better than before. But I'll call back Amitav here to talk about some of the borrower scenarios that he has gone through. Okay, so the question is, what is a DSCR loan? DSCR stands for debt service coverage ratio. What basically means is that what is the potential income on the property? And by income, I mean this has to be an investment property. That's how you will have an income on the property. So what's the potential rental on the property? And as a ratio of that, what is the mortgage payment or the housing payment on the property is? So for example, if your rental income on a certain property is $3,000 and your housing payment, which means your mortgage payment plus your property taxes plus your home insurance, if that were $3,000 as well, we are talking 1% debt service coverage ratio, which means that for every one DSCR, which means that the rent that you're getting matches with the housing payment that you have. If your rent is higher than the potential housing payment, then your DSCR will be 1.1 or 1.2 because it's 1.2 times higher than what is the housing payment. Lenders typically look for 1 at least on the DSCR. This used to happen completely on the commercial side before. Because I do a ton of commercial loans, we only used to talk about DSCR on the commercial side. We had never heard of DSCR on the residential side. So it's actually brilliant that some people figured out that what we used to do on the commercial side, we can do on the residential side as well. It's actually a pretty strong loan because if the rental income supports the housing payment, why not? And in that case, you don't have to provide their income documents or income tax returns or anything else. They can qualify simply based on the potential rental income of the investment property. And a lot of my investors have been able to buy it with a DSCR loan. Slightly higher interest rate, but again, if the rental income supports the housing payment, why not? So that's basically what a DSCR loan is a debt service coverage ratio. And a lot of people can buy even if their tax returns show negative income, by which they will not be able to qualify for a conventional loan, but they might still be able to qualify if it has a strong cash flow potential on the property. So hopefully that answers that. I'll bring Amitav back here to talk about some of the case studies. Sir, thank you.
Hello. Thank you, Shashank, for the enlightenment about this visa process and things. And as he just mentioned, the way he came into this country, I've been through the same journey. Came in this country as an L visa and going through all the loopholes and hoops of USCIS to be now as a citizen or permanent residentship down the line. So when we talk about this visa process, like as he mentioned, he has shown different categories, H1, L1, definitely in my case studies. I try to pick up some of those case studies, some of those different visa categories, and predominantly I work in the jumbo or the portfolio space. As he just mentioned, in the portfolio, as he just mentioned, that it all depends on the lender because lender's money is on stake. They are deciding what could be the policy for most of them. I'm not quoting, I'm definitely on a portfolio jumbo lender in Bay Area. And in Bay Area, as we can see, that most of the loans are in the jumbo portfolio. Hardly we have seen the loan limits are like loan amounts are less than like 800, 850. Though from 766 to 1,150,000, this is still considered in Santa Clara County is a high balance limit. In that high balance limit, still some jumbo portfolio lender, they can price out as a jumbo rates. But again, coming back to different scenarios, I would say that when we talk about this visa categories or the immigration categories, the most important part is to understand when it is expiring as a professional. So basically, when you met a client and they're on H-1B, L-1B, the first question I believe that you should talk and understand when their EAD expiring, when their renewal is due. Most of the portfolio traditional lender, they want 6 months before expiry. Like suppose we are closing the transaction on June 30th. From June 30th, if the visa or the EAD is expiring within 6 months, we need a kind of letter from their employer, maybe from the immigration or the attorney side, that will clearly reflect that they're pending application or pending renewal, or as Shashank mentioned, if there is a history that they're already H-1B renewed in past. So we need some kind of assurance from the lending side to make sure it will work. And I will tell you, do not wait for it. If you see your clients whose like visa will be expiring in September and you are closing in June, then please tell them before putting an offer, get a letter or a communication from the HR or their immigration team. Sometimes none of the like traditional big, I would say, organization, I'm like quoting a few names like Google, Facebook, and others, they only renew their process. They will start their renewal process 1 or 2 months before their expiry. That is a traditional process. So as a lender, as a portfolio jumbo lender, we do not need actual renewal process to be kicked in, but we need some assurance. We need some letter or communication. So that is the important part of it. So being that said, let's going through this case studies, and I want you to be here in this room if you can be like discussing or participating on this journey with me. So as you can see on the screen, there is a person who is, Deanna, is a permanent resident with an unexpired green card. She has a social security number, she is self-employed and meets all other selling requirement guides of Fannie and Freddie. If that is the scenario, and the borrower is definitely legally present, and she definitely has a permanent resident card, but this one is unexpired green card, and this is the scenario. What do you think? Is it a valid eligibility, what Shashank and we discussed so far? Yes or no? Yes. How many yes in this room?
Everybody please.
Yes, because we want here to be like participative. So we understand like whatever we are discussing, when we go back from this room, we have something to carry and share our clients. And that's true. This is eligible. Now, next, go to another 2 different scenarios. First scenario, there is a gentleman here, Curl, has expired work visa with no renewal pending. Again, I'm repeating this word, that it has an expired work visa, no renewal pending, has an individual tax identification number. That means I-10, that was discussed by Shashank earlier, that this person has an I-10. This is an expired work visa, is definitely a salaried W-2 acceptable employment history in this country, and meets all other requirements of Fannie and Freddie. So when we talk about Fannie and Freddie, definitely these are considered to be not a portfolio jumbo loan. This is considered to be an agency or high balance loan, falling under the category that most of the visas are eligible that and under the different EAD categories. So what do you think about the first case? Maybe. We have a good answer, maybe. Yes or no, 50-50. How many? Yes. No yes in the room? No. All no? Yes, sir. Yes. 1 yes. All no? Or few no? Or maybe. So we have kind of, if I say kind of a ratio out here, few no's, few maybe, mostly no, kind of a feedback we are getting. Okay, let's take it to the parking lot. We will discuss definitely about it down the line, that what would be the result for it. So no, the borrower is not legally present. So this is the key that we need to keep in mind, that it is not legally present out here. And on top of that, the visa that they are working, because Fannie and Freddie support multiple different categories of working visa out there, but visa is also expired. And now we need to go for the second scenario out here. Teresa has a current unexpired work visa. She has a social security number, SSN, and been self-employed for 6 months, no prior work history. I would say just focus on this one, no prior work history, because the beginning of my session when we discussed, we said there are few parameters always we need to take in consideration: residency, credit, and employment. Generally 2 years we need to take as a foundational like bullet point that have to have. What do you think? Like, she's definitely a borrower, legally present, having a work visa, but that is unexpired, but their employment history is less than 6 months. What do you think? She is eligible? So much of clues are here. Any yes in the room? All no? Yes. Perfect. Perfect. So, sorry? Correct. Maybe. That's why maybe is coming into the picture. And we are super happy that Shashank, that as you mentioned, like we are pretty much in the right platform. Yes, these are ineligible categories of visas due to their renewal status, due to their self-employed borrower history, less than 6 months in this country. So being that said, these are all tricky places that we need to juggle through. Yes.
If they, this third person was salaried from the company, let's say Google, in a 6 months, can be eligible?
You, Shashank, I think, talk about.
It's like came into the month working for Google for 6 months, if he eligible for the loan.
For the second one?
Third scenario.
Yeah, that scenario.
Visa, you mean?
Yeah.
Yeah, of course, they are. So Fannie Freddie.
But they don't have a like 1040 or any other thing.
Yeah, so Fannie Freddie does not have a minimum work history in the US requirement. They need 2 years work history. We have done loans with 9 months history in the US. We have done loans with 6 months history. But you need to document 2 years history. So you go back to wherever they came from. Let's say they came from India. You get an employment verification from there, get the equivalent of a W-2 form or an experience certificate from an employer there. As long as you can document 2 years work history, even if it's outside of the country, Fannie Freddie will take it. Jumbos are different though. They typically require 2 years of work history in the US. In some cases, the exception might be because for an intra-company transfer. But again, I'll let it happen. But Fannie Freddie will take it.
With the Fannie and Freddie that you just mentioned, if you go back to their natural country and look at the work history, does it have to be relative to the same country that they're in?
Yes, of course. The guideline clearly says, irrespective of where they were working, whether they were working in the country they come from, or they were, even if they were lived in the US all their life, that guideline of 2 years work history in the similar field of work is important. If you're a receptionist and then became a electrician and then became a plumber and now run a company of like recruiting, you could have 10 years work history. That does not really matter because you do not have consistent income from the same line of source.
But why Teresa is still ineligible is because it clearly says that she has been self-employed for 6 months with no prior work history. If she was working for Google, as you said, then it would still be eligible if she met all the other conditions. But on a self-employed income, you have to be running the same self-employment business for 2 years. Again, it's not about do you have 2 years of self-employment history. It's about do you have 2 years of self-employment history running the same company. That's why I say if you were a plumber before and run a recruiting agency today and you were doing something else 6 months back, you could have 10 years of experience. It really doesn't matter because you don't have consistent income from the same source. And that's what's important.
Okay.
Why card was just because I threw in an ITIN loan during my presentation. If you take that ITIN loan part out, which is technically a non-QM loan and a non-traditional loan, Carl is eligible. He has an unexpired work visa. Sorry, he has an expired work visa and Carl has not applied to renew his work visa, which means he can't live in the US, he can't work in the US. Both of that being the case, that's what makes Carl ineligible. There is no maybe on that.
But isn't there an ITIN loan? Because I've seen, I mean,
There could be, yeah. So we talked about ITIN loan during my presentation.
the bank doesn't really care about their legal status. They have an ITIN.
Yeah, so the banks, again, there are only a few, those are non-traditional loans, but you can potentially get an ITIN loan. Yes,
Those 2 years of work history has to be counted too.
that's correct. On the self-employment income, we take 2 years of average.
Yeah.
And it cannot be declining income. If they're not profitable, then there is no income, right?
Yeah.
That's where you do,
That's where you potentially do a DSCR kind of a loan.
Yeah.
Even if you have 2 years of self-employment history, but you don't have enough income to show, and we are talking net income, not because a lot of borrowers will come to me and they'll say, oh, I make $1 million a year. And look at their tax returns, $22,000 net income. We consider $22,000 net income. We don't look at how much money you grossed up, right?
Yeah.
So yeah, in those kind of situations, you can potentially do a DSCR or a bank statement loan where they might be getting a lot of deposits, but they don't have a lot of net income to show in their tax returns.
They qualify for the same bank statement programs or other.
Yeah, so there are other programs. They could qualify for a bank statement program. They could qualify for a DSCR if they're buying an investment property. And those are all the non-QM loans that have come up in the last 3-4 years, which is, I mean, that's almost 10% of the overall production loans. Pretty significant. But I think most of the scenarios that MTAB is trying to show is are your traditional loans. And in traditional loan, of course, Kala has absolutely no chance of getting right on.
Right, right. Perfect. And on top of that, just what Shashank also mentioned on the portfolio jumbo side that we are talking in like Silicon Valley perspective, I'm right now handling one case when the person is a director in a top-notch company back in India, and it is an intercompany transfer. He's just 9 months in this country, less than 2 years of everything, residency, their social security, everything. But try to understand the key word, intercompany transfer. They're a director in India, and now they're moving here, having a director position, no change, same job role. We are doing, they're buying a $2.6 million house with everything down, like proper down payment. They have reserves. On top of that, they have a good amount of RSU portfolio vested since 2013 in US dollars. Now we are doing an exception. So as a lender on BMO side, if you have those kind of a scenario, because I have been with different other organizations, they have restrictions. And as he just pointed out, it's the risk appetite from lender to lender on a portfolio perspective. They need to decide their guideline. For us, we can do that, but there has to be some compensating factor to support. In this case, and that's the reason, like me and Shashank are advocate for our client. You need to advocate the risk appetite to the underwriter and explain why you feel this client has a immense potential to buy a house, because they have sufficient money, they have reserves, they have huge amount of RSU to lay down the line. And on top of that, they are 13 years with the company, being a director, heading over like 200 plus people back in India. And now they're here and doing the same kind of job role. So nothing has changed. What changed out there? Only their status has changed. They're in India, they're now in US just for 9 months. Most of the other traditional big banks may say, no, it's a risk, we cannot do that. So that's a risk appetite that we can always go through that. Yes. Yes, I may not like go in details about the categories, but yes, this is on a L visa, and that's the intercompany transfer. And as he just mentioned, as you can see, these are the different visa categories that pretty much there are many more. Again, these are not the boilerplate, I would say, that you can focus. There are many more, but these are very common traditional one. If I start from the bottom-up approach, I would call these are the excellent category people, like O category, exceptional category people, scientists, research, extraordinarily capable people. They get a quicker turnaround time from the USCIS. I have seen people getting their visa granted, or they got their green card within 6 months from the date of apply. It's pretty quick. The longest process is H1. Yes. I would say here, like if you have a client like this, make an underwriting first. If they're in Bay Area, reach out to your preferred lender. If you want to discuss, please discuss with Shashank, me. We are always available. We need not to put any credit pool or anything. We will discuss with your client, and then we'll tell them that these are the prospective way they can get it underwriting first and then put an offer. Other way around, you need to put a loan contingency. Definitely do not take a risk, because sometimes some of the realtors, they reached out, hey, Amit, just no one is taking a non-contingent offer. Now, this is a new fashion, I would say. Don't take me wrong by using this word. It's a fashion. Someone just called me out and say that, Amit, you told my client that they need loan contingency, but there is loan contingency is not like working in Bay Area anymore. I said, that's true, but They are selling their house. Their debt to income ratio is more than 46 on a portfolio loan. And I know I cannot fly the loan by any means. Even I'm doing the financial gymnastics in two hands, I cannot support that. So get it fully underwritten. So I would always say these are the rights for your buyer. Three different rights. I definitely talk about loan contingency, appraisal, and inspection. Use these rights very carefully. And visa is one of the tricky place out there that you need to support it. So if this is again a Fannie Mae situation, if, yeah.
In terms of timelines, there is really no difference what immigration status you are on. The problem happens when you go get pre-approval from someone who does not understand immigration status. They look at your income documents, they look at your assets, and they're like, oh, solid borrower. There's nothing wrong with this, right? And you send them a pre-approval, you go ahead and you waive the loan contingency on this. Not your problem. This is what the lender said, what the borrowers wanted. Then they get into underwriting and they're like, oops, I did not notice your H-1B expires in 30 days. Now I need this, and now I need that, or maybe I can't even approve the loan anymore. I mean, we have done, I don't even know, in my career, dozens of loans from different companies where they were pre-approved, made an offer on a no loan contingency, and then they were declined when the loan got into underwriting for no other reason but immigration status. So I think it works both ways, is because a lot of time borrowers would look at a house today, want a pre-approval tomorrow, make a loan contingent offer that they have. Because it's like they never thought about it. Pre-approval is the last thing on their mind. Right? It's like, oh, I work for Google or I work for Cisco, I must qualify. What's wrong with I definitely qualify to get this loan. And they will, I have borrowers like this, they will email me on Saturday evening, I need to make an offer tomorrow morning. Can you get me a pre-approval loan? And by the way, I need to make a non-contingent offer. Like, dude, where were you sleeping all the years? Right? And no, you definitely have to make this non-contingent, there's no other way I can get it. So it's this entire planning which is very important. As real estate agents, you guide them to the fact that as much qualified as you might think you might be, it's a great idea to go through pre-approval process to give your lender some time. It's because in situations like this, as I said, it's better to go through underwriting and make sure that everything lines up.
And you mentioned that earlier, did he have credit?
Yes.
Because he works internationally.
But 9 months is enough to get some credit.
Correct.
Okay, that's what I'm wondering, because like.
9 months to get some.
Right.
He don't have the same.
Right.
There, but then part of the criteria, you must have credit, right?
Yeah.
Yes.
Credit history.
The lowest that I have done in the US was about 8.5 months, and they had 6 months of US credit.
Yes.
Family credit to it.
Or
Sorry?
was it like a credit card?
Yeah, even if you get a secured credit card,
And,
and those are things that we of course guide our clients on,
yeah,
because a lot of them are immigrants, is how do you build your credit,
Correct.
right? So one of those things is, even if you start with a secured card, you can walk into a credit union, most likely they'll give you a car loan. And the problem with a ton of immigrants are they're actually debt averse. It's we come from, a lot of us come from culture where debt is not a good thing.
yeah.
So they don't understand you need debt to build your credit.
Yeah.
It's because they're, oh, I'll just buy a car for cash, and that's the most stupid thing you will do. Right? You have to get a loan for those kind of things.
And this is rightly the correct sentiment. Even when I came in, I have the same sentiment, to be very honest with you, Shashank, that yes, we are very debt sensitive back in India. We said, oh, buy in cash, why to go for debt? If I told my same thing to my dad that, hey, I'm taking 3 different credit cards, on another certain dates, you'd be like getting a kind of shock. Hey, what the heck you are doing? Should I send some money to you to support? Kind of a thought process. But this country completely worked differently. So they should have some credit lines from upfront. If they're 6 months, as he just mentioned, that they should be having a decent credit score to start the ball rolling. Okay, and I would go to next one, and these are pretty much, I would say that if you have a borrower and have a documentation to verify status, if the answer is yes, these are the pretty much standard thing you need to go for, like permanent resident card, work visa, entry stamp, and employment residency, and I-551 is the temporary form of green card. And anytime, I always would say all my clients that any renewal is pending and you are thinking of putting an offer within that 6 months window, make sure there is a backup document from your employer, from the immigration attorney to support your case. If it is not, believe me, you might say, Amit, why it is so important? This is important for the portfolio lender. Because I haven't seen, because whenever I dealt with a jumbo loan, all the time, this is a common questions from the underwriting. And he also mentioned the same thing. Most of the underwriter born and raised here, they haven't gone through these loopholes and the painful process of it. So we need to educate them about this process. Even there are some documents in I-797, if I go, this generally a I-797 looks like. In this I-797, there are different forms, like I-797A is a kind of intimation. There is an acknowledgement. There is different variety of it. If you look into the visa, the top right-hand corner of it is talking about the category of it. There is an expiration date. So you need to work along the line. And in case this visa is expired within 6 months, definitely make sure there is an unexpired stamp of I-551. There is an updated I-94. And sometimes underwriter also ask you that why is your visa stamp is expired? Because you never left the port of entry for last 6 years, 7 years. And from COVID, believe me, I have so many instances that the family never left the port of entry for last 4 or 5 years. And now their visa is showing back in 2018. There is no visa stamp. And I had a hard time, believe me, to explain that thing. Underwriter sometimes asks, I need an acknowledgement from USCIS. Do you believe that USCIS will do it overnight? No, it's not gonna possible. So definitely I-797 has to be there to support and augment any expired visa status. So I would say this is just visa is one of such problem. Employment history, credit, down payment, gift, international transfer, RSUs, I would say, like I already talked to Jody earlier, that we might do something on the RSUs. That RSUs are another tricky, like restricted stock. Whenever we talk about Bay Area, Silicon Valley, we call about different companies who are now AI boomed with the stocks, like NVIDIA, one of them, like they're doing excellent, phenomenal. But how that will impact the financing, we would love to talk about. So visa is definitely one of the prevalent, important part of it. And as being said, we are open for questions. Our contact details are there. Shashank is definitely a senior leader in this industry, having a tons of experience handling the situations. I'm also there on the portfolio jumbo side to go through this tricky waters on multiple things. So visa is one of such categories, and definitely up to you, sir, if you want to add any words of your wisdom.
No. Talk about there to be multiple different methods where people get transferred, they're newer to the country, their credit history, and sometimes it's a cultural thing. As you said, I have come across borrowers who are like, why should I get a loan when you can buy something for cash? And why do I need 3 credit cards when I can have 1? Why do we need to spend on credit cards? So the entire education on credit becomes very, very important. Sometimes it's culturally very different than how they grew up in their country. So people get sensitive around that, and we have to educate on how this works. So that's the important part of it. But really, I mean, coming back to the part that you mentioned, which is the most important part for real estate agents, is that make sure you're guiding your clients to give their lenders enough time to do this due diligence. If you push for a pre-approval letter, you'll get a pre-approval letter. But at the end of the day, I mean, you are putting your own money at risk. And just because you work in one of the bigger tech companies does not always mean that you're qualified to buy a home. So we have to be very, very careful. I had to go through, it wasn't my borrower, so just a case study to share here. They actually worked for NVIDIA. His RSU income for 2 years was only for 1 year. The loan officer doing the pre-approval did not understand how RSUs work. He pre-approved him for an open event, $2.4 million home in San Ramon. The loan got declined. The realtor kept pushing him to work with multiple lenders. He got declined at 3 different lenders before he came to us. We had to get him one of the no ratio loan at almost 10.5%. I mean, state, yes, for money deposit, whatever. But there are no ratio loans, just so you know. It's no ratio loans are basically loans with no ratio, meaning you don't have to even state your income on those loans. Higher interest rate, about 9.5%, 10%. But no ratio loans are available. Those are, of course, the worst case scenarios. So in this case, we had the property online, we had the A&D online. we were able to get in that loan. And once he will have 2 years of RSU history, we'll be able to refinance it into a regular, regular conventional at that point. So we need to understand what the boards don't understand, the fact that immigration, even though almost half of the population in Silicon Valley is an immigrant, the underwriting team is still primarily US born, US raised, and they don't understand these things very well. And so you have to be very careful when you're removing contingencies on this, and work with people, of course, who work with. So that's all. Our contact details are, of course, there. Amitabh, as you mentioned, he specializes more on the jumbo side of it. Those are the kind of questions that you should probably take to him. BMO has a pretty competitive rates on that. We specialize in everything outside of jumbos. So you're looking at FHA, conforming, Freddie, Fannie, non-QM, DSCR, commercial. We do all of that here and across the country. So that's pretty good. So any questions, and then we'll wrap it up.
10%, I saw that there's ITIN loans, with 10% down, because up to 25%, I've never really seen 10%.
Sure.
What's the difference or?
I don't know what the 25% guideline looks like. Of course, with 10% down, you'll probably be looking at higher reserves. That could be one of the things, but I don't have a comparison to make between 75 and 90. But you're right, typically most lenders I've seen max out at about 80%.
And with your ITIN, obviously legal status.
Sure. Yeah, I mean, ITIN, if you file for ITIN, that's your legal status. That's what we consider as the legal status.
Jody, any questions from the Zoom?
I have a question just for
Yeah.
information. Do you find, I'm gonna use the Indian culture because you guys referenced that. Do you find that sometimes buyers want to buy something, but you have to have that conversation that it is okay to have debt? Or when they come, do they just already have that understanding that in order to purchase a house, you're gonna have to have debt, don't worry about cashing out or having cash and things? I'm just curious.
Yeah, it's a little late in the process by the time they come to buy a home because they have probably gone through that stage of understanding that debt is important
Okay,
in this country because you need to have a credit history. But I've had conversations with people who are 2 months in the country or 3 months in the country.
right.
And they're like, hey, I just bought a car, I bought it for cash. How cool is that? I said, very uncool. So, it's because you should not have done that. So yeah, sometimes when we have conversation very early in the process, when they have just come to the country or thinking about buying a home, and we need to help them build their credit history, then we need to have some of those conversations that debt is important. Of course, you manage the debt in a way which is right, but you still need to have that. But yeah, by the time they're coming to buy homes, most of them probably already understand that.
Okay.
Most already have the credit history and understand that part. But yeah, I mean, the conversation that we typically sometimes have is that, well, I can put 50% down, should I do that? And then we have to, of course, do the cost benefit of, does it makes more sense only to put 20 down instead of 50? And what are we looking at in that situation? But yeah, that's a question. Anything else? No? Thank you so much, guys. Our contact details are there. You'll get a copy of the presentation. So reach out with any questions that you guys might.
Thank you so much.
Thank you.
Thank you.
Thank you.